Hey everyone, it is Julie here with TipRanks. Today we're taking a look at 3 stocks that are being bought up by billionaire investors. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at recent purchases from 2 different billionaire investors. We have 3 stocks today, 2 that they've been purchasing separately and 1 that both have been piling money into. Our billionaire investors not only have a ton of money themselves, but also manage billions of dollars as well. We're starting off with Ken Griffin, who is the founder and CEO of Citadel. They manage over $62 billion. And second is Cliff Asness, who is the co-founder and manager of AQR Capital Management, who has about $143 billion in assets under management. So of course, we're going to take a quick look at each of these companies today, what it is that they do, how much money these billionaires have been putting into the stock, and of course, what the Wall Street consensus is on the future potential. Don't forget, you can follow along over on TipRanks.com or by downloading the TipRanks mobile app right to your device by following links in the description down below. Now let's get right into today's 3 stocks. Starting off with one of Cliff's picks, we have Archer Daniels Midland. Their stock trades under the ticker ADM, currently priced at $73.46 per share. Now, they are in the red overall this past year, down nearly 23%, modest gains in the last 6 months, and down 8% in the last 3. The company does pay a dividend with a current yield of about 2.4%. Archer Daniels Midland is a global leader in the agricultural processing industry. They play a pivotal role in transforming crops into essential products for food, animal feed, industrial, and energy uses. With a presence in over 170 countries, the company engages in the procurement, transportation, storage, and processing of a wide range of agricultural commodities, including soybeans, corn, wheat, and cocoa. As you saw on the stock chart, they have been facing some downward pressure this year, and their last quarterly report near the end of October didn't help as they came out with some mixed results. Revenue fell short of expectations, while the earnings per share did come in with a beat. For their third quarter, they reported revenues of $21.7 billion, which did fall 12% year over year and was a couple billion short of expectations. However, earnings per share of $1.63 did come in with a 10-cent beat. Management said that they delivered a strong quarter in increasingly dynamic market conditions as they continue to adjust their business model to meet the evolving needs of their customers. With the stock being down year to date, Asness seems to have seen an opportunity. He increased his position by 32% in the last quarter, purchasing over 680,000 shares and bringing his total investment to $211 million. Following that Q3 earnings report, we did hear from one analyst over at Stifel. He commented on their recently announced partnership with Solugen, saying that ADM's strategy of continuing to diversify its business model by leveraging its significant processing and logistics assets warrants a reminder amid the current volatility in its traditional businesses. Now taking a look at how Wall Street weighs in on the stock, Archer Daniels Midland does have 8 current analyst ratings, coming in as a strong buy with 6 buys and 2 holds. Their average price target comes in above $93 per share, which would be an upside potential of 27% from current prices. Looking at the most recent ratings following that last earnings report, on the low end we do have a hold with a slight upside of 2%, several in the low 20s to mid 20% upside, and a high-end price target from Stifel with an upside of 57%. Second, we're taking a look at one of Ken Griffin's recent purchases. This company has a very similar ticker, but very different business. We're taking a look at Advanced Micro Devices. Trading under the ticker AMD, not to be confused with ADM on the last one, these guys are priced just shy of $125 per share, and they're one of those tech stocks that has been seeing unstoppable growth this past year, up 62%, pretty flat in the last 6 months, but gaining again recently, up 18% in the last quarter. AMD is a well-known player in the chip industry. AMD is a global company that specializes in manufacturing semiconductor devices used in computer processing. They also produce flash memories, graphic processors, motherboard chipsets, and a variety of other components. Most notable, they recently announced the upcoming launch of their AI-focused next-gen AMD Instinct M1300 data center GPU accelerator, which is a mouthful, but is a big launch coming up for the company. AMD reported respectable results for their third quarter, which came out on Halloween, October 31st. They had both an earnings and revenue beat. They reported revenue of $5.8 billion, which grew 4% year over year, and earnings per share of 70 cents, coming in 2 cents ahead of analysts' expectation. Management said that they delivered strong revenue and earnings growth driven by demand for their Ryzen 7000 series, and that in the fourth quarter they expect to see strong growth in their data center and continued momentum in client. During the third quarter, Ken Griffin purchased nearly 534,000 shares of the AMD stock, bringing his total stake to nearly 2.5 million shares, worth over $300 million. An analyst from Rosenblatt Securities says that AMD is one of their highest conviction ideas, noting that the company is in the early stages of disrupting the CPU and GPU markets through superior chip design and manufacturing execution. They believe that AMD can capture at least 50% share in data center CPUs over the next 2 to 3 years, and that their M1300 GPU compute series is just incremental opportunity in the billions. AMD has attracted plenty of attention from Wall Street, with 29 current analyst ratings coming in as a strong buy. But with so much recent growth, they've actually surpassed or are getting darn close to those price targets. With 22 buy ratings and 7 holds, the average price target comes in at $126, and that's just upside of 1.9% after AMD seeing so much recent growth. Down below, we can see several buy ratings that are actually in the negative as they've already surpassed those targets. We do have some hold ratings with downsides up to 20%, and on the high end, we do have a couple around 19% and 15% here. And third on our list, we have the stock that both billionaires have been buying up lately, and it has seen unstoppable growth this year. That is Nvidia. Their stock trades under the ticker NVDA, currently priced at nearly $480 per share, which is insane when their 52-week low is $138. The stock has seen growth of 186% in the past month, finally starting to cool down a little bit here, 20% in the last 6 months, and actually down 1.5% this past quarter. Nvidia has emerged as the undisputed AI chip king this past year, and that is a market segment in which they dominate with more than an 80% share. Their success has been founded on their trailblazing development of the GPU, with the company initially concentrating on gaming applications and PC graphics technologies. Nowadays, their products are primarily employed to enhance the speed of complex computational tasks, with their data center sector providing the bulk of revenue. Nvidia saw their earnings and revenue soar this past year, and in their latest quarterly report, they came out with record revenue, which grew over 200% year over year. In their third quarter, they reported revenue of $18.12 billion. And if you look at the chart here, you can see what a big jump up that is year over year. And for their next quarter, they're anticipating earnings per share of $4.46 compared to 88 cents in the same quarter last year. For the third quarter, they reported revenue of $4.02, coming in comfortably ahead of the $3.37 expected. Management said that their strong growth reflects the broad industry platform transition from general purpose to accelerated computing and generative AI. And like I said, both of our billionaire investors have been scooping up Nvidia stock this past year. Just in this last third quarter, Asnis scooped up 224,000 additional shares, increasing his position by 20% to over $661 million. And Ken Griffin, with an even bigger investment in Nvidia, in Q3, he increased his holdings by 57%, bringing his stake to over 2 million shares, worth over $1 billion. Once again, weighing in on the stock is an analyst from Rosenblatt Securities who said that Nvidia remains one of their top plays. He says that Nvidia remains one of our top plays as the company still stands in a league of its own when it comes to software and AI solutions. We see Nvidia's earnings potential for current year 2025 in the high 20s, which we view as attainable as Nvidia is a best-in-class AI play with growth vectors into next-generation networking and early days of autonomous driving. Rosenblatt Securities backs up that optimistic commentary with a street high price target of $1,100. All in all, Nvidia has 34 current analyst ratings, coming in as a strong buy. And even with all the growth they've seen this year, there is still some upside in the price target. With 31 buys and 3 holds, the average price target of $661 would be an upside potential of over 37%. Lots of analysts weighing in on the stock, a lot of 5-star analysts too, which we love to see. Here is that Rosenblatt Securities rating with an upside of 128%. As we said, that is the street high. A lot in those double digits. I think our low-end price target is still 19%. So that is a look at 3 stocks being scooped up by some billionaire investors. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And please keep in mind that these videos are never a suggestion to buy or sell any specific stock, just showing you what Wall Street and those big investors are up to. So make sure you're always doing your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.